Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bed Bath & Beyond Inc. quarterly report. The recent surge in Bed Bath & Beyond stock price can be attributed to the emergence of a new entity operating under the same name. After the original company filed for bankruptcy and liquidated its assets, Overstock.com acquired the trademarks and intellectual property of Bed Bath & Beyond through a bankruptcy auction. The rebranded company, now known as Bed Bath & Beyond Inc., began trading on the New York Stock Exchange in August 2025 under the ticker symbol BBBY. Since then, the new entity has reported earnings and made strategic announcements, such as investments in blockchain technology and the acquisition of Kirkland's intellectual property. These developments have likely contributed to the stock price increase, although it is worth noting that this growth only began after the company's rebranding and listing on the NYSE. The primary drivers of revenue growth or decline can be summarized into three key areas. On the decline side, a significant decrease in orders delivered -20% and -35% has led to lower revenue. Additionally, decreased sales and marketing expenses have also contributed to the revenue decline. On the growth side, an increase in average order value, +3% and +8%, has partially offset the revenue decline. Furthermore, the sale of common stock under the At the Market sales program has generated significant net proceeds, $101.7 million. Other factors that may impact revenue include inflationary pressures, foreign currency risk, market price volatility, and changes in user search behavior. However, these factors are not as directly impactful on revenue growth or decline as the three key areas mentioned above. Net income experienced a decline of $30 million, or 14%, in the 9 months ended September 30, 2025, compared to the same period last year. However, there was an improvement in net loss for the 3 months ended September 30, 2025. Profit margins saw significant improvements, with gross margin increasing by 420 basis points and 450 basis points year-over-year due to lower carrier costs, return costs, product costs, and discontinued Canada operations. Sales and marketing expenses as a percentage of revenue also decreased from 16.7% to 14% and 13.7%. These improvements in profit margins suggest that the company is becoming more efficient and reducing unnecessary expenses, which may be contributing to the decline in net income. The company's debt level and interest expenses have undergone significant changes in recent years. In terms of debt level, the short-term debt has decreased from $24,871 to $17,994 between December 31, 2024 and September 30, 2025. Additionally, net cash used in operating activities increased, while financing activities changed from a net cash outflow to an inflow, indicating a reduction in debt. Regarding interest expenses, accrued interest on Level 3 investments decreased significantly from -$21.84 million to an unknown amount. Operating lease costs also saw a decrease, from $1,756,000 to $851,000, while variable lease cost increased. However, the overall trend suggests a reduction in interest expenses. Management's outlook and strategy. The company's management emphasizes the importance of optimizing shipping and customer service operations to avoid harming the business. Their primary focus is on transforming the customer experience by curating stylish assortments, expanding offerings with trusted brands, and enhancing online shopping experiences. To achieve this, they plan to deploy capital resources efficiently in technology, investing in machine learning algorithms and generative AI to support operations and enhance the customer experience. Management also expects changes in interest rates to have a minimal impact on results of operations, but notes that foreign currency risk could become more significant as they grow their operations. Ultimately, management's strategy is centered around increasing shareholder value through stock price appreciation rather than paying dividends, ensuring sufficient cash flows to continue operations for at least the next 12 months. The company has made several strategic moves through acquisitions and divestitures to shape its business landscape. Key acquisitions include the buybuy BABY brand, the Bed Bath & Beyond brand, and the Zulily brands. Additionally, the company purchased equity securities in the Brand House Collective and acquired intangible assets worth $15.2 million. On the other hand, the company has divested certain assets, including Speedroute LLC, which was dissolved, and its corporate headquarters, resulting in a loss of $1.6 million. These transactions demonstrate the company's efforts to optimize its portfolio and focus on key business areas. The company has demonstrated a commitment to returning value to its shareholders through various means. In 2025, it paid dividends, providing a direct return on investment for stakeholders. Additionally, the company has engaged in share buybacks, with notable transactions occurring during the 3 months ended September 30, 2025, $4.9 million, and the 9 months ended September 30, 2025, $6.2 million. These actions indicate a proactive approach to enhancing shareholder value through both dividend payments and strategic share repurchases. Concerns about inventory buildup and supply chain disruption. There are valid concerns regarding inventory buildup and supply chain disruption. The company acknowledges that actual shipping times may differ from estimates due to uncertainty, volatility, and macroeconomic conditions, such as supply chain challenges, page 28. Furthermore, the financial summary highlights potential disruptions caused by tariffs, bans, or other measures that increase product prices or limit access, page 38. Supply chain challenges are also anticipated due to unpredictability of applicable trade barriers. These factors collectively pose a risk to the company's operations and ability to meet customer demands in a timely manner. That concludes the financial summary for Bed Bath & Beyond Inc. Feel free to comment below, and I will be happy to answer them when possible.